are these things agents, right? Or are these people?
I think the first priority for us is not the technology side. It's about the product. It's about how to enable the users.
No L1s, no L2s, almost abstracting completely away from this chain-centric view.
Is part of the bet that you're making there with the progressive decentralization also somewhat reliant on the advancements in ZK?
What's going to be more important is that crypto and AI, I think collectively, are going to be front and center.
Welcome back to The Roll Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
What's going on, guys? Welcome back to The Roll Up. Today, we have an episode about some of the cutting edge primitives built in the crypto and in the blockchain space, which on our podcast, I think that we are going to start to kind of separate the two, the speculative use cases of crypto and the more non-speculative use cases of blockchain. I anticipate today is going to be more of a thesis-driven conversation around some of the non-speculative technology-based use cases, which we're always happy to talk about. We got Wyatt here today and Xiang. Welcome in, guys, from around the world. Good to have you.
Great to be here.
Glad to hear. Thank you.
For sure. So both of your first times on the show. Robbie and I have been doing this for 4 years. We've had many guests, but it's our honor to have you and bring you guys up for your introductions and why you're building in crypto, why this space matters to you, and a bit about your background. So I know you guys both have some pretty interesting backgrounds. So why don't we start with you, Sean, and then we'll move to Wyatt. Welcome in.
Yeah, for sure. Yeah, hi, my name is Sean, and my background is basically cryptography. So actually, I got my PhD back to 2015, and at that time, working on cryptography to see how it helped the real world. So and then I jumped into the blockchain community like in 2017. So working in a company, startup company in Asia Pacific, and help them to build these cryptography-based solutions. And then I joined the O1 Labs as cryptography engineer. And then at that time, we started the Primus, so working on these ZKTLS solutions to help to bridging like Web2 data to Web3, and then also privacy preserving computations using FHE stuffs. So that's basically me.
Yeah, great to be here, guys. Wyatt, I'm a general partner, founding partner of VanEck Ventures, which is a new early stage venture fund that we created here at VanEck. Just a little background on VanEck. It's an asset management firm, been around for almost 70 years, manage about $120 billion, mainly like an ETF business. However, in 2017, we were one of the first firms to file for Bitcoin and ETH ETFs, which finally got approved in 2024. And at that time, really started putting out more research and diving into crypto. That led to us creating 2 more liquid funds that are active today, and then eventually a venture fund. So we kind of cover everything from like the first check into an early stage company to growth capital to eventually having ETFs. And I imagine more crypto products or more tokenized fund products will come to market in the future as well. For me, I got into crypto in 2018. I transitioned from being an entrepreneur to being an investor. And it was one of those kind of right time, perfectly timing the market type of things. I was working at an investment platform and broker dealer that was trying to pioneer crowdfunding. And this is also post ICO boom. And my view at the time why I was so excited is that I thought you could take kind of the magic of ICOs and internet capital markets, but actually have them be in a structured way so that retail doesn't get burned, but they can participate alongside VCs. As I joined the company, we were already in the process of being acquired by Circle. So I rolled into Circle in 2018. This was pre-USDC. At the time, Circle operated an exchange, a trade desk, payments products, a brokerage app, all of which we kind of got rid of or turned really that technology into the underlying technology to support USDC. And then in 2021, I started Circle Ventures, which was our corporate venture arm. And during my time there, we invested in over 100 companies, including a lot of the L1s, L2s, wallet tech providers, kind of moving up the stack, bridges. And that experience really, I think, has provided the perspective and thesis for VanEck Ventures, which is we're chain agnostic. We really believe that the chains are distribution points. I think the technology has been battle tested. Um, and it's in our opinion the best time to be investing in the middleware in the applications that drive the consumption of block space, but also drive the consumption of things like stablecoins. So our thesis is very focused on fintech and real world applications. And what got us very excited about Primus is that they enable that. So I'm sure we're going to get into this, but we want to be able to be compliant, but also protect consumer data. We want to be compliant, but we also want to innovate in areas like AI. And you're seeing that battle play out today with closed sourced and open source. So we're really strong believers in open source, in permissionless networks, but at the same time, we want to make sure that we can create things that actually follow the rules. And I think the setup that we have here with the current administration has like never been perfect for both of those things to collide. So really excited to talk about that.
And we can tell that you're in NYC, which is the new crypto hub of the world.
I am.
Shout out to the new administration. I'm excited. I'm going to be there in about 2 months do like a 3 or 4 month stint to try to just grow our business and grow our brand. And so excited to be able to network and just do all the things that you can do when really the perception of crypto has been so poor in the past, but it really feels like it's switching back to a more positive light. And I think, and again, I think that I started this out, and Robbie and I have been kind of harping on this, that we believe that a lot of these non-speculative use cases around blockchain outside of like crypto, almost like the whole Bitcoin, not blockchain movement back in the day, or maybe it was vice versa, is actually starting to show itself again. So, Wyatt, curious from your perspective, how your thesis originally developed. And you mentioned it already, where we had this kind of barbell of apps and infra. And frankly, if we're thinking about it as a seesaw, it was so heavily tilted towards infrastructure for basically early stage investing. Why? It was a proven way to get a return. It was safe. It was battle tested. One VC told the next VC that investing in infra, oh yeah, we're an infra only fund. We're an infra only fund. Dude, I just do infra. You do infra, I do infra. And so like we had a conversation with a lad from 1KX in person in Bangkok, Robbie and I, and we talked about how this seesaw is kind of actually turning the other way, and how there's a lot more upside in investing in applications at lower valuations than there is in funding the next chain at 100, 200, 500 million valuation. There's a lot more user-owned relationships. Those who own the order flow own that upside. There's a lot of opportunity there as well. So you mentioned a couple things, and I kind of added in a bit there, and I'm sure Rob has some stuff to add, but curious from your perspective how your thesis originally developed on the crypto markets at large at Circle, and then how that's shaped now into this $30 or $40 million fund that you guys are running at VanEck, and what that thesis continues to be, whether it be application heavy, infra, middleware, and kind of where you see the next era of growth for early stage crypto companies.
Yeah, I think you hit the nail on the head, which is apps in turn inform infra, and that cycle repeats itself consistently as technology develops. So, for example, if we go back, right, it was CryptoKitties clogged Ethereum blockchain that led to conversations around scalability. We've had many such examples over time. We've gotten to a place today where, like, if you look at the underlying numbers, like trillions of dollars of value is flowing over public blockchains. Stablecoins are leading a lot of that transaction volume. We've seen that with trading as well. So clearly the technology has been battle tested and used at scale. Anytime I reference that for someone who's not in crypto, they're always like, wow, I didn't realize that, right? Like I thought stablecoins were this new thing that just popped up. And it's like, they are pretty new, but they're settling over $24 trillion a year. I don't think we can comp that necessarily to like Visa volume that's constantly used, like stablecoin payments. They're not really payments for payments; they're payments for assets. They should be comped against something like DTCC volumes. Um, but and I think coming back to like the infra versus apps, it depends. So I would say in a lot of the real world use cases today around AI, there's a huge play at the middleware layer. I would say the same thing for financial services. So if we want stocks, bonds, currencies to trade on chain compliantly, there's actually a huge missing piece in the middleware layer there. But we also need distribution, and that has been so clear in crypto. Like we really lack distribution. And so what you get are these kind of, as you said, the endless L1 investments, the endless printing of this kind of like, internet money, shifting TVL from here to there. And it's just a massive rotation game. And I think that ends. I think that ends over this next cycle as you have real businesses with real metrics in real time on chain. So think about that, right? Like crypto companies don't need to do quarterly earnings calls. You can track this information in real time, make your own assumptions on what's sustainable, and make bets into the market. So we want to, the founders that we back, they have to be great people, super talented, really ambitious, but they're the ones that are not like running away from building something that somebody might actually use. But in some cases, like Primus is an example, they might be that middleware because we're in this transition period where like this stuff is really still being built and we're okay doing that. It doesn't need to be another L1, which is what I really liked about the Primus team's approach is that it's blockchain agnostic. And so that's something I really learned from being at Circle. We had USDC deployed across 15 chains. It's somewhat a venture portfolio in that respect. Like you don't really know, and it's a power law curve. So it's about being at the right place at the right time. Circle was early to having stablecoin on Ethereum, benefited from DeFi summer. USDC went from $2 to $33 billion in a calendar year, was early to Solana. That has played out really, really well. And so I think about that with our companies is like, I think the days are over of just being like X for X ecosystem. You need to be across chains and see like where is the innovation happening. So today in the AI world, that tends to be on things like Solana and Base, but that could change as new chains start to move into those spaces. So that's how we think about it. But ultimately, like we want to own distribution endpoints, and where maybe it's a little too early to make that play, that's when you want to make a middleware bet.
Yep. Quick comment on the stablecoin front is that absolutely settling 24 trillion is kind of mind-boggling for people to wrap their heads around. You made a subtle kind of aside to DTCC, which is on the scale of quadrillions of dollars of settlement. So
yeah.
I think that gives people a sense of the scale. And then moving on to where like Solana base, right, maybe are the winners right now in the chain centric view. Andy and I and the show are big believers in modularity, and the way this is trending towards is no L1s, no L2s, almost abstracting completely away from this chain centric view, but going from the progression went from obviously L1s, Ethereum, the alternative L1 thesis from there, ultimately to rollups and the rollup centric roadmap. Those rollups originally were optimistic rollups. Now they're becoming ZK rollups. And we believe that they will eventually become ZK apps on their own. And we will have these blobs of state and they will settle to one another and interoperate with one another via ZK proofs. And ZKTLS is another form of that kind of takes the real world blob and brings in a social graph and a data graph into the ZK apps as well. So I'd love to get a little bit more into the technicals, Xiang. Maybe you can explain what Primus is at a high level and we can drill down into some of these components.
Yeah, for sure. Actually, we started to build ZKTLS back to 2022. So after we saw the DECO paper, I think that's the very beginning of ZKTLS stuff. So yeah, we kind of found that the DECO paper is not that efficient enough to to be deployed in the client side. So our cryptography team spent like half a year to improve everything. So make it quite lightweight. So that's what we call the MPC TLS or the proxy TLS. So we have like two versions on that. So the goal we achieved is that we make it so lightweight that we can deploy it inside the browsers, and it's like more than 10 times faster than existing ones, like the Deco paper. So after that, I think one of the players in Eastern Foundation, like just Lottery, saw our paper. So yeah, we are now helping them to switch their protocol to ours because we are more performant. So that's the very beginning, that because we are using like zero-knowledge proof systems, like interactive zero-knowledge proof system, not like snarks stocks in layer 2, because all that kind of ZK systems are working in the server side because it's very computation intensive and memory consuming. But this is not suitable for consumer apps, because all the consumer apps running in browsers, running in mobile apps, so we had to use very lightweight systems. So that's the power of our paper, our solution, which is I think is the go-to solution using Quicksilver, which is invented by our cryptography team and is the most efficient interactive zero-knowledge proof systems, and to make it quite useful in all of these applications. So so for now, and maybe for the next step is that we want to build this as well as said middleware for all these projects who want to bring this Web2 data or valuable data to Web3 or to blockchain, and to make it more decentralized, to make it valuable, to make the users can monetize all the data, to build the more diverse applications in Web3 or in blockchain. So like a few years ago, we only have like price oracle. We have like DeFi summer. So probably we have more like interesting applications to build with ZKTLS, because we have more diverse data and we can build more diverse applications in Web3, and when using like blockchain or smart contract. So that's basically we can offer, and I think our solution is now the most efficient one, and we are going to promote our product, and we are going to promote the community, and also we need support from investors. So that's why we are so excited to announce that Primus like raised $3.5 million in this round, and VanEck is one of the investors, and we got a lot of help from these amazing investors and others. So yeah, so
Congratulations.
thank you, Andy.
Yeah, it's the journey is just beginning, and we appreciate the high level understanding. I think what would even be more helpful now with that context is understanding some of kind of like the problem space here, which I believe to be is one of the core use cases for Primus is this kind of intersection between AI and crypto, right? And we're seeing this AI agent narrative come, it really hit hard all the way up until about Truth Terminal OTC $15 million of fart coin on my head. And I'm still holding because I will hold and I will not be shaken out. But that narrative went up and then kind of has came down. So Wyatt, maybe you can paint this AI agent narrative from your view, from the more institutional view, and then why you feel there's a strong need for verification. And then Xiang, super excited to understand more technically how you guys provide that as well.
Well, I think I'm more interested in AI agents replacing things like verticalized B2B SaaS. Like ultimately, the agent is only as good as its end use case. So of course, in crypto, like the first use case was a KOL, right? And like that, we went right there. Just like
They're not replacing me, Wyatt. They can't take me
no, they
down.
can't replace you. But it's like the KOL pumped the token. But
And he just outed himself as a KOL.
yeah, exactly. But what we saw pretty early on was that people were like, are these things agents, right? Or are these people? I think was it AIXBT or somebody had like a spelling error, and they're like, wait, AI shouldn't be making spelling errors, right? I could be mixing up my agents, but I think the market, what happens in crypto is it tends to reward really interesting, kind of far-reaching ideas, and as those things come to market, sometimes that can actually have a negative effect on the token price, because it could be like, oh, like maybe this isn't as grand as we thought it was going to be. But I think the huge missing gap there is like you're connecting these agents to things that are creating content, and again, we can't necessarily verify that this is an agent, and we don't know kind of where they're pulling their data from, as an example. So I think the market, let's put aside token prices here, but I think there's been a lot of really good constructive feedback on what these agent frameworks are. Separately, I think as we create more agents that are actually going to do things, I think this actually becomes more of a regulatory and education issue. Because, for example, like AI agent payments are talked about all the time. There's actually an interesting company that we're making an investment in now. Like, why are agents good in payments? It's like because AI creates perfect competition, and so these agents are really almost like solvers. They're looking for the best path, but they also need to follow the rules. You have the travel rule, you have KYC, you have AML, you have all these, you have GDPR in Europe. Like, how do you bake that in? And that's really more of a question of how do you create this stuff and make it programmable and digital. There was a tweet earlier about from Doge, but like they found like this Gringotts with all of the retirement accounts and things like that. Like, we live in a paper-based world, right? And so like we need to move this stuff onto blockchains, which I think actually the government will help push this forward. And then we need to make this stuff programmable so we can enforce compliance on chain. And that's where I think the magic of a lot of what Primus is working on, which would enable ZK KYC as an example, that's where it really starts to shine. And so you can imagine that you log in with Privy, right? It tracks all the places that you've already logged in, but your information is safe. And I actually think this is going to become mandatory. Like, my view is in the next 5 to 10 years, regulators are going to prefer this because we're not storing personal information. How many hacks do we have each year at like large credit agencies, for example, where all of our information is leaked? This actually perpetuates fraud. And so I think crypto is amazing for this. Like, you can pay using stablecoins on your phone connected to your non-custodial wallet. You can use your Face ID to enact that transaction. And on the other side, all you're doing is just showing a credential saying like, I am Wyatt, this is my wallet. And it's like, okay, great. Now you can make that transaction. That's the world that we're heading towards. And so again, this is kind of a section today where I don't think we're ready for that world yet, which is why we need some of this middleware to bring it to life.
Yeah. Yeah, I appreciate your kind of chronologically driven idea from, okay, we did like infrastructure was very successful from the investment wise. You can't just jump to like the end user application from a venture perspective from square one. There's a logical step in between that likely still has a lot of opportunity left to kind of squeeze into it before you jump into like the, like the friend techs of the world or the farcasters of the world, or, like these really true end user applications. And so it also makes sense just based on where the ecosystem is headed from this multi-chain approach. And Xiang, you guys have a similar approach, but before we get into kind of your chain agnostic approach as well, our community has a really strong understanding in our audience of ZKTLS, right? Similar to Oracle's. However, the key advantage of ZKTLS is you can verify that the off-chain data was brought on-chain, but you do not need to expose the data. Whereas Oracle's, it's very clear that there's an expose of data of sorts. However, a new concept that you guys are bringing to this verification stack, if you will, is ZKFHE, which is something that I'm not sure that our audience is super, super up to speed with. So maybe you could illuminate what ZKFHE really means and how that is different from normal, fully homomorphic encryption, and then how you guys use that technology in your verification stack.
Yeah, for sure. So, first of all, on the fully homomorphic encryption, it means that you can just encrypt your data and outsource the data to like anybody, to a third party, that he can do the computation on the ciphertext without seeing any plaintext. This is the meaning of FHE steps. So I think there is kind of a few startups now working on FHE, like they can build private on-chain applications, because for now all the data on chain is public. So using FHE, you can like preserve the privacy while do the computation on a smart contract. That's very straightforward applications there. And but one thing that missing in this solution is that you have to trust the third party who is doing the computation in terms of integrity, not the privacy. So he can just return you some random, ciphertext, random steps, or you cannot check is correct or not. So ZKFHE means that, okay, in order to ensure the trustworthiness of that operator, the operator has to run a general proof systems to make sure that, okay, all the result is done by the correct logic. I'm not cheating. I'm not give you some rubbish. So I can make sure that all the computation is correct. Means that we can solve the trust problem in all FHE applications, especially in Web3. I think this is very important in Web3. So this is the meaning of ZKFHE. It actually solve the missing part of all the FHE applications. I think all the FHE applications need that. And so why we are working on ZKTLS and the FHE together? So the story is here. So actually, I think people know ZKTLS means that we can prove the source of the data. That's what ZKTLS done. So we can make sure that, okay, all the data you bring from Web2 is true data. It's not some kind of false data. So, but this is only the step one of handle these kind of data, which means that, okay, I bring this data and I can make sure that this data is correct. But the most important thing we think is that how to handle or how to compute or how to use that data. Means that, okay, can I put it on chain to do some kind of computations without losing privacy? So that's why FHE comes. And we believe that we are solving the whole life cycle of data, proving the authenticity of the data and the computed data. And the ZKFH means that we can make everything trustless, and we can bring this, whole tech stack for the whole data cycle applications. So that's the vision of Primus. That's why we're now working on ZKFH. Yes, and I think I think people may mention that one point is, okay, FH is not efficient enough for now, and even ZKFH is not efficient for now. So that's why we spend I personally spent 4 years on this problem, and when I start Primus, we spend one more year to design new algorithms, general proof systems to speed up. So now we have very a nice result. Our proving system is more than very close to 400 times than existing ones. So we are very close to make it practical to improve all the efficiency of performance to make it very useful in applications, like to speed up FHE rollups or any other FHE related applications.
Awesome.
The pace of innovation in ZK is just astonishing. Like anytime we have a conversation with a ZK founder, it is incredible to hear now we can solve proofs in 10 seconds. Now we can solve it in 3 seconds. And it continues to accelerate, which is awesome to see. I mean, you did a great job kind of explaining ZKFHE, which I think is a major unlock because we haven't seen any, we have FHE projects out there. They're able to compute on encrypted data, right? And then we have ZK projects that are able to provide very succinct proofs and people can verify it, but we haven't seen those put together. And so I think to your point, you make the entire Primus here, makes the entire stack, and you mentioned it makes the entire stack trustless. I think part of the innovation here is that it makes it trustless and verifiable, because that was the part that was missing, was that FHE, to your point, we can say, 2 + 2, right? And I can encrypt that so that, we pass it to someone. They get 2 random bits of information. They don't know it's 2 and 2, but they can spit back an answer and say it's 4. With FHE, they can do that. But when I get the answer 4, how do I know that's correct? And obviously these computations are much more elaborate, like in real use cases. But now with ZK, I can verify 4 is the correct answer. They can provide a proof that 4 is correct, and I can verify that on my side, completing the entire supply chain, if you will, the entire stack, making it trustless on the computation and verifiable when I get the answer to that computation. And to connect the dots here, Wyatt, I love the vision that you had from a regulatory sense, because we can abstract this to say that, I'm the citizen of a state or a country. or I'm an accredited investor. I don't have to give away my social security number, my annual income, how much I'm right. But I can just provide that as encrypted bits. The regulatory agency can provide a proof, or some middleware can construct that proof and then deliver it back and verify that without ever having to know my street address or my mother's maiden name. They can prove that I'm an accredited investor. So these are how these applications connect to these middleware, connect to these real world use cases to ultimately advance our privacy and the efficiency of these systems. Xiang, I wanted to ask, kind of like just any other components that are at work here. Are you guys working with any prover networks or any proof marketplaces or any verification layers? We've spoken to Lagrange or Fermat or some Risk Zero and Succinct. Are you working with any of these, ZK infrastructure players that are helping to provide and accelerate ZK proofs?
Redstone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. Redstone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the Redstone exhibition today.
Yeah, that's a very good question, and I think the final goal of us is to build this proving network, or to bring this ZKFHE or ZKTLS and the ZKFHE network for to make it more decentralized, to build or bring more applications there. But for now, I think we got a very astonishing improvement in ZKFHE steps, but I think it's still very early, and especially when you are handling very complicated applications, it's very early. So our strategy is that, okay, first of all, I think it's only ZKTLS already have a lot of applications. We can support these applications first, and we can bring a lot of Web2 data to the whole ecosystem. And the next step is that we gradually build these FHE solutions for further privacy preserving applications and make them together. So this is our strategy. We want to make it really useful for consumers. We don't want to build just a network and then there's no apps running one day. So that's our strategy. So we now promote our ZKTLS product. It's already production ready. So we are promote all of this. And also we have cryptography team in house. We're still improving everything to make it decentralized network in ZKFHE stuff. And eventually we got this network for the all these kind of real applications. This is what we really care about.
I think one interesting thing to kind of double click on your point, Robbie, and to kind of riff off of what Xiang was saying. I think not only are these really interesting technological advancements, but think of the cost savings that these are going to create. Coming back to the Doge retirement example, these things take months to process, paper-based systems. You think about the Fed and the technology that they use, Jeremy Allaire was talking about, it's they're running on servers from the 1970s. So part of upgrading all of this to more digital infrastructure is that we can put in these systems that just make it really, really cheap. And think about, sitting inside a institution like VanEck, broker dealers have to store customer information for 6 years. And they often do that in printed forms, plus with a digital copy. And so now what you're seeing is that the primary record could be stored on a blockchain. And if that happens, then you can start to layer in these technologies. And again, if I move, maybe I just update a credential on my wallet. Or if my income changes and I'm a credit investor, that just gets updated. And that's verified and confirmed by somebody else in these same types of networks. And the cost savings of that is going to be enormous. And it reduces a lot of friction, importantly. And so it enables certain financial transactions that otherwise would have taken a lot of time, that hold up money, and that makes this whole thing just much more seamless. We don't have the bank holidays. We don't have any of these things that we've previously had. And that unlocks a ton of capital and makes it more productive.
I think just the removal of human error too is something that's, yeah, it's just, that takes it away. And you just put it into these ZK attestations, these kind of proven technologies. And Wyatt, you have quite a bit of insight into the regulatory kind of circumstances that we've been existing in for at least the last couple of years, and things are going to change, I think, in the next couple. But like, how should we be thinking about designing crypto or blockchain primitives that enable compliance without sacrificing privacy? And like, ZK KYC, ZK attestations, how can we as an industry basically build our technology going forward to actually adhere to what is going to be required of us in the future to actually reach adoption? Because it would be silly for us to build all this technology and not build it in the manner that the largest governments or corporations in the world will accept, because then we're basically just fighting an uphill battle against those who will. So like, what should be our mental model for the builders watching, for our audience? How should we be thinking about building these technologies to kind of bridge that gap? And whether it's specific to the ZK attestation, ZK KYC question, or just more broadly, blockchain technology as a whole?
Well, I think the biggest hurdle, the most important hurdle, like we're climbing over right now, which was the regulatory side. We don't need net new regulation for this stuff. Like, I don't expect certain compliance rules to change. I expect that we're just not going to have action from the SEC. And you already saw that, just yesterday, Hester Pierce came out and, started to allude to what will be in the SEC's purview and what will not. And so that's going to be great. They're not trying to go out there and, go after a Primus for building something that's actually useful. And I think that's what's led to a lot of the speculative activity we have in the market. It's like, it's bizarre, but it's
Yeah,
completely
meme
backwards.
coins are like a result of, okay, there's no utility, so we can't
Yeah.
get in trouble. Or
And
DAOs, even, we're like, we have to do a DAO, and the token can only be a governance token, so the
right.
token can't even accrue any revenues from the actual protocol.
So
Layers
those
like Jupiter,
restrictions are gone. Those
yeah,
restrictions are going
like
to be gone, and you're going to have what's going to be more important is that crypto and AI, I think collectively, are going to be front and center. And so we're shifting that focus. Now, it doesn't help that like the president drops a meme coin right as we're like, you know, putting out some of this, some of the new rules and regulations. But I think first and foremost, people are going to lean in, and you're going to have stablecoin regulation. You're going to have a market structure bill, and then it's off to the races. And so, as you know, for example, if the government does indeed, they've alluded to the fact that they want to use blockchains and stablecoins to track government spending. That's fantastic. That's going to add in a new layer of transparency. I think you're going to see a lot of corporations start to move into this technology because it's faster, cheaper, right? Like that's the main thing. If you're moving value, blockchains are a phenomenal tool to do that. So I think the first part was regulatory. We're getting over that. Second part is just building for compliance. So I see this a lot in the payment side, where teams will kind of just be like, great, moving value from wallet A to wallet B, like we've solved it. And the reality is the rules are generally more complex over a certain transaction size. If I'm sending money to you in Europe today, we might have to follow what's known as the travel rule. We talked about this a little bit before, but like GDPR for consumer data in Europe, like you need to think about where your customers are going to potentially be moving value. Confidential payments, I think, is going to be huge. Like, let's say Amazon decides to come on chain and start using stablecoins. Do they think the whole world's going to start tracking like Amazon's payment flows? Probably not. The other alternative is that they could use something like an omnibus account. So you could see this with Stripe, you see this with Circle, right? We can see what's going in and out of Circle or Coinbase's main wallets. We don't really know what's happening at the customer level. That's okay. That's an intermediary step. But eventually you would have to assume that they're going to want to own and operate all their assets on chain, which means we just need to be able to always focus on selective disclosure. Like we should not be, we want to disclose, we don't want to disclose sensitive details. And so I think, ZKPs are a phenomenal use case there. We want to make compliance fully programmable, meaning like I can see where your location is, maybe again, using ZK proof, we're not releasing that information, but I know that I need to follow XYZ in order to make that transaction happen. And so that's just embedding compliance directly into the protocol. And then making sure that you have, the right attestations and you're ensuring like data integrity at each step of the transaction. So I think if we start with the use cases and back into it, you can see how you could start to build these systems.
So we don't need to build for like some potential future net new regulations.
No,
We just need to
fair.
fit our current system into the into
Yeah, it's
reality,
this,
basically.
it's this,
Like,
then that. Yeah, basically, like it's logic. Like, is Robbie a credit investor located in the United States? Can he invest in this thing, right? What that process would look like today is like I have to fill out that paperwork every single time. And then if I'm the broker dealer or the investment platform, I have to hold that personal information of his, including his address and social security number and accreditation status, like in paper form for 6 years. That's insane. So I think what we're going to see, and what the SEC and folks like David Sachs and others have alluded to, is that like we're going to upgrade a lot of this stuff. So we don't need to do all these things because they're outdated. And I think hopefully as a result, some laws do change, but the compliance part itself like is not going to change. So it's up to Primus and teams that they're going to build this stuff that can then plug into big corporations. So they kind of sit between the payment systems, for example, or traditional financial systems that are coming out today using blockchains, and then the end consumer or institution.
Wyatt, I don't want to be a bear, but do you think it's the case that we leapfrog from Gringotts, underground limestone cave with a bunch of banker boxes full of papers all the way to blockchain? Or do you think there's some intermediate steps to get it
Definitely intermediate.
online but not on chain?
Yeah, that's where I think you have players like Coinbase, Circle, Stripe, right? That will um, they'll be huge proponents of the technology, but they'll do it in generally like more custodial ways where they might not use this. But the world's really big, right? And I think a lot of people, for example, I think Privy on the consumer side, like huge Trojan horse here, right? If you own the login layer, why can't they just issue, why can't they be the verifier of a credential that just says these things? And I think crypto companies and startups will be the ones that will push this, and then corporations are going to have to match it and compete. So it's not going to happen overnight. I always like in blockchain technology to e-commerce, right? We're at like 25% penetration, 20 something years in, and you still have trillion-dollar companies like Amazon. So I think that's going to happen in crypto as well. It doesn't need to be 100% penetration. There's a lot of value. There's a lot of big things out there to go tackle.
yep. Xiang, I also have a question that I'm going to start with. I don't mean to be a bear, but I'm going to try to poke some holes into Primus here. One, regardless of how you guys do your ZKFHE and ZKTLS, there needs to be some sort of mechanism to achieve consensus amongst either nodes or some sort of party that's going to essentially settle these proofs. Like we need to have a way to settle the verification of the data from ZKTLS on chain, as well as from the proofs that you generate to verify the encrypted data with the FHE portion. So, how do you guys plan to reach consensus? Are you guys building your own chain? Are you guys going to be just doing something with crypto economic security, like a AVS from EigenLayer or Symbiotic Network, or like how do you plan to achieve sufficient decentralization to settle the proofs and to settle the data on chain? And where do you plan to do that, and why?
Yeah, that's a very great question. So yeah, um, in terms of ZKTLS and ZKFHE, so actually there is only one party. So doing the attestation or doing the computation, in the whole protocol. So it has to be a way to make it decentralized because you don't want to just just one operator or just one guys doing everything. So we have a few like solutions to do this, but I think it's not just the cryptography. It's a kind of combination of all possible solutions to make it secure, make it decentralized. So we're doing it in like a few steps or gradually. So first of all, I think to make in ZKTLS, there is actually a trust assumption, meaning that there's no conclusion between the client and the tester. So for now, the very beginning, so we're now putting our like ZKTLS server into TEs because we there's kind of it's some kind of way to make sure that we are not the guy who is manipulating the server side. We can just put everything into TE. So it's very cheap, it's very fast, and it can satisfy a lot of applications like loan of wrapping stuff or DeFi applications. That's totally sufficient. And in the next step,
So
I
just
think that
real quick on that point.
yeah.
So basically, you're offloading the trust assumption of the single party who would be settling the data or the proofs, and you can correct me there where I'm wrong, into a TEE, and effectively the trust assumption then becomes that Intel or whoever is managing the chip of that TEE that's hidden in a warehouse somewhere that can't be touched or messed with, so no other party can get basically proprietary information or priority information into what's happening. And so you're offloading the trust assumption from like one single party that you guys would own, putting that into the TE, and then allowing it to be kind of obfuscated, if you will, in that manner. Maybe you can correct me where I misspoke.
So basically, if you are using ZKTLS protocols like in cryptography, we can run everything. So in order to reduce the trust, we run our ZKTLS protocol inside the TE. So that's simple. That's simple. So means that even we own that server, we cannot change anything. So we are not the bad guy here. So and we can deploy to any different TEs, providers. For now, we are now like collaborating with Fala, and we can collaborate with others. That we can make sure that to support most of the use cases right now. So that's the first step. I think it's quite reasonable for us to do that because it's very cheap and it's very fast. And we just spend like 1 week, we can integrate everything, and there is no performance loss in this solution. So the second step is we want to make it very decentralized. So we have two options. So first of all, as you said, we can use crypto economy solutions to like leverage like AVS, to allow different operators to do the attest and to run our protocols, and even pass the TEs, so we can make sure that everything is very decentralized and is also very trusted. So this is, I think, is the go-to solution that we can do in the future, and without sacrificing the performance very 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 much. And the final solution we want to do, and we actually are now doing it, is that for now, I think the ZKTLS protocol is kind of that involves in MPC protocols. That is just two party, and it's called two PC protocol. So we are now extending to multi-party protocols. Means that there is a bunch of attesters that run the MPC protocol with the client to the ZKTLS. I think it is the kind of the end game of ZKTLS, because we can decentralize everything and in terms of using cryptography. But yes, it comes as a cost because it has to has a more communication size. The performance is like a little bit bad than our two-party version. But the strength of our team is that we have very experienced cryptography and cryptographers in our team. We like have more than 5 person who is professors in cryptography. So we kind of designed this protocol, and we are pretty sure that maybe in 1 year we can deploy or design very efficient ones. But to make sure that we can support all the use cases, we kind of do TE first, and then we do AVS, and then we do multi-party TLS steps. So that's the whole goal of the roadmap of Primus.
Yep.
So yeah.
Yeah. And so is part of the bet that you're making there with the progressive decentralization also somewhat reliant on the advancements in ZK, such that you guys use a TEE in the immediate term, which is cheap and fast, while still ZK proofs are not as cheap and fast as we'd like them to be? But if you expand this over a 3 to 5 year time horizon, you can move to be more decentralized while the performance of ZK improves, such that in the end state, you can have really high quality ZK proofs, fast and cheap, but then also maximally decentralized through this MPC model. So you kind of get the best of both worlds. But it wouldn't make much sense to get all the way there in the immediate term because, well, it's an early stage team, early stage project, and ZK still needs to catch up a bit. Is that kind of like the right way to think about it?
Yeah. So I think the first priority for us is not the technology side. It's about the product. It's about how to enable the users, enable the builders to build their applications and support them to provide a better user experience. I think that's the most important thing. And then we can gradually make it more secure, decentralized. So everything is about product. And although I work in cryptography for a long time, but from my side, I think we should provide a products and a better user experience for the clients, for the developers. So that's the first priority in Primus.
Awesome. All right, guys, zooming out from into the weeds a bit, we just have a couple more minutes left. Want to think about more use cases here and just more general kind of forward looking for where we think this is going to take us. So, Wyatt, when you guys were evaluating, Primus as well as other investments that you guys have looked at, when you're thinking into the future and trying to because when you're investing in venture, and Robbie and I have a ventures arm, we've done about 50 or 60 deals. We've invested 7 figures of our own capital, no LPs over the last 2 years. It's basically just going to be it's our retirement fund, which is crazy to say because it's so risky, and I don't have a 401k. I don't think Rob has an IRA. This is our retirement fund.
Going all in.
Because who else would need one of those things? But that being said, like, we aren't thinking about our investments with the current lens of today, right? We're thinking about what does the world look like in 5 years, and does this make sense? So whether it be for Primus that you want to start with, or just more broadly, how you think about evaluating the crypto landscape, if you will, in 3 to 5 years, or even longer, like, what is your mental model for allocating capital? What is your mental model for what's the Primus thesis? What's your kind of broad thesis when you're looking at the crypto landscape down the line, and how do you use that to make good decisions in the now?
Yeah, I think that the hardest thing about crypto is that, it's part technology, it's part capital markets, it's part attention. And you have a lot of people probably really focused on the latter two buckets, which leads to a lot of, short-term speculation, narratives that come and go. I think the biggest thing as a venture investor is like you can't quickly jump on a narrative like you can in liquid markets. You can't speculate because we're locked up for 3-5 years before, for example, we could potentially exit an asset. And that's not even the timeline that we necessarily want to exit an asset. We want to see these companies grow and grow into the market and continue building out their product suite. So, for example, if we jumped on the AI agent narrative, like, you'd be washed out in like 6 months. So I'm not saying that that's not an interesting space to make investments in. In fact, we're making a kind of payments investment there today. But I think about, like, what are these agents going to do? I think that they're going to do very specific tasks that they could potentially replace software as we know it, or applications. And therefore we want to like focus on that. And so the payment side is something that I'm really, really excited about. And we talked about this a little bit, but like ZKKYC is an example, like that enables a lot on the payment side because I already know the information about this person. Again, you can embed compliance. Primus could help there. We've seen kind of the explosion of like ZK peer-to-peer on off ramps. That's awesome. Like now, again, same thing. Like I don't have to go on, put my information in, but I can get access to Cash App, PayPal, these different markets. There's actually an interesting company that we made an investment in that does a very similar thing in emerging markets where you have large cash to stablecoin transactions. And eventually you're going to have a lot of stablecoin to stablecoin transactions as new stablecoins come to market as well. That's really, really exciting too. And I think like just in general, finance is a huge design area for all things ZK. And I think, the Primus team have identified some of those examples. And so what was really exciting is like, again, we want to back the best teams that are, cutting edge in developing this technology and that we think in 5 to 10 years can grow and be, a service provider for the entire space. So what's cool and what we eventually thought would happen, Primus is actually, I think, the first investment we made because we were looking into confidential payments at Circle. We made an investment into Inco. And so we were looking at providers like Zama. And when we met Xiang and team, we're like, okay, these guys have developed the best technology. We are going to make a lot of investments at the application layer, / we already have made a lot of investments through Circle. And so if we can plug these guys into our existing ecosystem, it's going to enable all the real world use cases that we think are eventually going to come. My bet was that it was going to come on the back of things like stablecoin regulation. And I who knew about Trump, right? I kind of put that as like 50-50 odds. Now it's like speed up your timelines because, again, I don't think this is going to happen overnight, but everyone's thinking about stablecoins. So think of the logical progression there of like, great, I have all my wallets, all my information's just sitting there on chain. Like, that feels weird. All right, so then I could use a centralized provider, but like, again, maybe I don't want to do that. Maybe I want to own all my own flows. And that's, again, where I think a lot of this privacy preserving technology comes into play. And it'll just run under the hood. And I'm a firm believer that a lot of this just really gets abstracted away, which is also why we were really excited about the blockchain agnostic approach. You should tap into as many ecosystems as possible.
Actually, as I said before, we should definitely working on these long-term stuffs because as we saw, because there is a lot of narrative in the market, and it really lacks of real applications in Web3. So like a few or 2 years ago, there is a lot. Yeah, I think there is a lot of like DeFi projects. And DeFi is good, but I think there should be more diverse applications in Web3. So I think that the future is that probably we can bring all Web2 applications to Web3 using like technologies like ZKTLS stuffs. So that's I think the bright future in Web3, and that's yeah.
I think Andy mentioned a term earlier that I hadn't heard. I think it's a great term based on what Wyatt was talking about, ZKKYC, which to me, if that's not a narrative, it should be, because I love that as a use case.
Awesome. Xiang, thank you so much for coming out as well. Wyatt, it's been a pleasure. And Robbie, as always, I mean, we are also supporters of Inco and Remy and the team. Have been there for a while, and really, really excited about this technology. I've learned a lot, actually. So today's been great. Thank you guys so much.
Thanks for having
this was
us.
fun.
Thank you
Thank
for
you guys.
All right.
Hey.